So let's take a quick look at the chart and see where we are. And it's interesting. Things have developed very much like we would have expected. You might remember I drew these lines a couple weeks ago, and we had just kind of broken through this. And I said, I would sort of expect that we would go up a little ways, maybe up around the 200-day moving average. We would come back, and that this area that has been acting as resistance, like here, and support in the past and resistance in the past, it's an important area. And that we would continue. I'm going to extend it out here a little bit to somewhere around today or yesterday, close enough. And it continues to be interesting. And if you look at it, we kind of went up, like we said. There was a high of this day that got close to the 200-day moving average. We came down. The area acted like support for a few days. We went up again, bounced off the 200-day moving average, came back down, just right in the exact same zone. And again, there's not magic to this. I've gone over this many, many, many times. When you see areas like this that develop and act as support and resistance over and over and over again, what that means is that area, that price point, is a place where there's some equilibrium between buyers and sellers. There's a certain group of sellers who say that, oh, that's a good price to sell at. There's a certain group of buyers that say that's a good price to buy at. And the equilibrium shifts at these points because things got so cheap that all of a sudden the buyers came in, or they get so expensive, when it's acting as resistance, that the sellers come in and they overwhelm the buyers, and then things go back down. So these areas, just again, no magic to them. It's just a place where the equilibrium of buying and selling kind of shifts. And so we've seen that, but here it is again. And we've been following this. I've extended this zone out several times. And, what I drew here is, purely accidental. It's based on some historical, just patterns that I've seen, which is the 200-day often also acts as a bit of resistance. And you see it here again. The 200-day came in again. Now we've blasted through it, and it's kind of interesting. And then we came down and we just touched on the 200-day again. So, we'll see if that holds, but wouldn't totally surprise me to see that becomes our support now. The other thing that's interesting, and I don't know that this is happening, but we might see something developing right here where you see this area, we shifted from, again, from buying to where sellers came in at this price. Same thing happened here. So do we have another area of support and resistance? We blasted through it. Now it's becoming support. And, so I don't know. I've got kind of 3 data points there that look like maybe we've got another area that's developing, and we'll kind of keep an eye on that. I certainly can't say for sure. And, that's why, our real, I've talked about how we use this in the past, is that I mainly am going to, I'm absolutely going to follow the E.W.S signals, but I might use these things to if I'm going to maybe tilt my deltas just a little bit, but within the range that I'm working with, I might decide to use this information to decide I'm going to put a trade on today, or I'm not going to put a trade on today. Sometimes I'll do that, but you can sort of see why it might be useful to kind of pay attention to the charts and just be aware of these areas. Now, I also talked last week about events. There's one more kind of charting thing I want to look at here. Events that kind of move the market. And I talked about these kind of economic events like Fed meetings, economic reports like our CPI, or like the GDP reports, the jobs reports. Those things do tend to have some really interesting impacts on the markets. And coincidentally, the day we were talking about this, I don't know if it was the day or the day after, but I can't remember because we didn't have a call last week. But anyway, we looked at the calendar, And if you don't remember that, I'll just real quickly go back to it. If you look at Market Watch and then you go to Calendar, which is over here on the sub menu on the right, you see all these things. And I was saying how I often like to look at the economic reports or those things that are going to come out. So we looked at those and let's see, let me go forward a little bit here. You can kind of see, yeah. So here's a whole bunch of this is obviously next week, but you see, GDP reports, credit reports, jobless claims reports. So these are all things that have the possibility. Well, when we looked at this originally, you may remember, you'd have to go back and listen to the call we did a couple of weeks ago, but we said, hey, the Fed minutes is coming out. And a lot of times the Fed minutes are useful because they say they give you an idea of what the Fed's thinking. And so if I go back to this was the day the Fed minutes came out, and we were kind of trickling along with not really any big change. And then this was right when they started speaking. Basically, the market shot up, and it was a pretty significant gain. I think it may be an even more interesting one, which I don't know if you were watching yesterday, but if I go to charts and I look at, let me look at a 15-minute chart here. Yesterday, let's go to yesterday. By the way, just so you know what we're looking at here, all these grayed out areas, those are after hours. So the in between, the dark areas in here are that's the day session, or what we call regular hours trading session. So yesterday, the regular hours, if I just look at this, you can see again, the market was just kind of trickling along, no big change. But yesterday, Jerome Powell, who he spoke and talked about, he heads up the Fed, and was talking about what the Fed thinks, right? Again, it's more qualitative than quantitative, but he was saying, well, we think we're getting maybe, there's still going to be some inflation, but we think we're not going to have to make as big of interest rate increases in the future. So we are going to have some, but they're going to be smaller and maybe fewer of them, maybe more space between. Well, the market really liked that. Can you guess, which bar was the one where he started speaking? And you can see the market went from basically flat to up over 100 points yesterday. And it's just an example of how these events can really move the market. Now, obviously, if you knew he was going to say something positive, you could, really benefit from this, but we don't know. We don't have insider information. What I could tell you yesterday before he spoke, it was all over the news. I knew he was going to speak. It was in the calendar that I just showed you, all that. So I knew he was going to speak, and I knew it would move the market, but what I didn't know is which way. So I'm not willing to go, oh, I'm going to go all in, with long deltas or short deltas, because I don't know. What I would prefer to do is keep deltas kind of flat, and that keeps me out of trouble. And so that's the one thing I can do when I know there's an event coming that's really going to move. And this is a big move. I mean, look at this move. We're at 39.59 here, you see, so call it 39.60 up to 40.80. That's a 120 point move in, whatever that is, a couple hours, last couple hours of the day. But since he spoke, just, buyers came in like crazy because it was very positive news. So enough of that. But I just wanted to go back. We talked about it last call, and I just thought there's a couple really good examples of what that kind of looks like.